Welcome, my friends. The news today is that the Richcession has started. First of all, what is a Richcession? What does it mean for the economy? But before we get into all of that, please press the like button and leave us a comment below. We would love to hear from you. Please subscribe and hit the bell icon so that you are notified of upcoming videos when they are released. And before we continue, a word from the sponsor of this video. Today's sponsor is ProWorldNet.com. ProWorldNet.com is a job website specifically dedicated to licensed professions. Doctors, including any type of specialty. Nurses, and that includes all grades of nurses. Lawyers, regardless of area of legal focus. Teachers and professors, from kindergarten through graduate school, as well as any kind of job that requires a government license or certification. And ProWorldNet.com also includes short-term gig-type jobs as well. So be sure to check out ProWorldNet.com if you are looking for a job or an employee. Richcession is a relatively new term that entered the conversation earlier this year to explain the possibility that wealthier Americans would experience recession-like conditions, but not everyone else. The idea emerged as layoffs rolled primarily through technology firms and often affected highly paid workers. Sticky inflation, white-collar layoffs, and surging interest rates are all putting pressure on a certain type of American. Higher income earners. What we normally see in an economic recession is that lower and moderate income households really bear the brunt of it in terms of job losses and financial hardships. But we haven't seen that this time around, said Greg McBride, senior financial analyst at Bankrate.com. The stock market, a source of wealth for the rich, struggled in 2022. The S&P 500 sank more than 19% in 2022. The same year, 1.8 million Americans lost their millionaire status, according to UBS 2023 Global Wealth Survey. Despite the stock market's summer rally in 2023, the U.S. economy still faces several headwinds. There has been a wave of corporate bankruptcies, including some pretty high-profile publicly traded corporations, including Rite Aid, Bed Bath & Beyond, and David's Bridal. And it's not just public corporations with their stock trading on public exchanges that are weakening. Major fast food franchisees with hundreds of locations have filed for bankruptcy, especially in the Midwest. And let's not forget the economic disaster overtaking commercial real estate, especially office towers and hotels in urban cores that have literally been handed over to their lenders. Real estate investment trusts are down sharply, and several have cut their dividends. Well, who owns stocks, fast food franchises, and real estate? That's right, the rich. Bank of America's Consumer Checkpoint Survey for September 2023 found that high-income households have become more pessimistic about the economy. The same group also appears more cautious about spending because of soft wage growth and slowing job creation for high earners. According to a report by Bank of America Institute, higher income households in the United States are facing economic headwinds. The report reveals that households making more than $125,000 have seen wage growth slow down faster than lower income households, while spending trends have followed a similar pattern. The report also states that the highest earning 40% of households by income accounts for more than 60% of overall consumer spending. Therefore, a labor market slowdown driven by the higher end of the income scale could have an outsized impact on the overall economy. While unemployment remains at historically low levels, Bank of America says unemployment benefit claims are rising the fastest in the highest income group. Higher income houses filing for unemployment benefits rose 40% in April from the same month the year prior, more than 5 times the rate of the lower income bracket. White-collar layoffs have been on the rise in the United States. At the beginning of the pandemic, waves of layoffs hit retail, leisure, and hospitality workers, anyone whose job depended on in-person interactions. But now that the pandemic is waning, those workers are in shorter supply, and now it's higher-paid employees who find themselves on the receiving end of layoff announcements. In addition to this, several companies have announced plans to cut thousands of white-collar jobs. For instance, Rolls-Royce is planning to cut up to 2,500 white-collar jobs as part of its Fit for the Future plan. And when you think about it, what type of jobs will be most affected by the rise of artificial intelligence? Not plumbers, electricians, or maintenance workers, that's for sure. Higher-paid white-collar employees are the target of the current recession, and thus the term Richcession. Generally speaking, this appears to be a general deflation of the bubble in risk assets that was created by the oversupply of money by central banks during the pandemic. The question is, how much air is still in the bubble? But what do you think? Please leave us a comment below and hit the like button. We would love to hear from you. Please subscribe and hit the bell icon so that you are notified of upcoming videos when they are released. Please share this video on social media. Thank you for watching.